if you didn't sell any cone, you still have to pay $50 for lighting the store. Like us, the fan, the AC, the lights here, the bulb, the sunshine type stuff, the ambient, all those stuff. If you sell 1,000 cones in 1 hour, you still have to pay 50. So the nature is fixed here. Understand?
Yeah, I got it.
Junpyo, Anis, Ali?
Understood.
Good. B, the wages of store manager. Variable or fixed? Junpyo? The wages of the store manager is? Well done, fixed, right? Whether you sell 1 cone or 2 cone, 3 cone, or million cones, the store manager's salary is the same. Cost of ice cream. If you sell 10 ice creams, the cost will be higher, right? You have to purchase more sugar, more creams, more cones, right? If you sell 1 million ice creams, then you need to order the raw material according to 1 million ice creams, right? This is variable cost. D, the cost of napkins for customers. If one customer comes, you have to pay 1 napkin. If 2 customers comes, you have to pay 2. If 1 million customers come, you have to pay 1 million napkins. So the number of cones sold increases, napkin cost increases. It's a variable. So these two are variable. Understand? Good. Okay, let's take a 10 minutes break on mix, then we start the mixed cost. Okay. Hello class, welcome back after the short break. Okay, we were talking about the cost behavior. We talked about the fixed cost and variable cost, and now we will talk about the mixed cost. We also call this semi-variable cost, right? The other name of mixed cost is semi-variable cost. So mixed cost is basically the mixture of both fixed cost and variable cost. So in order to understand that, so let's talk about let me see here. So we have considered the example of utility cost. For example, so utility cost have some fixed monthly charges. For example, even if you did not use any electricity, you still be charged with, for example, 50 kilowatt or 50 units. That's it. Above 50 units, then you will be given some different rate. But minimum, even if you use 20 units, you will be charged with 50 units bill. So it means up to 50 units, the cost is fixed. Whether you use 1 unit, whether you don't use any unit, whether you use even 45 units, you would be given the bill according to 50 units. And above 50 units, 51, 60, 70, so 70 minus 50, so 20 units will be multiplied by some other rate, right? Increased rate. So it means in that case, we have an electricity bill, and that bill is semi-variable bill or mixed cost bill, right? So how we can find out, or the equation for that one? So that's a mathematical process. We are not going into that one. Just remember that the mixed cost is equal to fixed cost plus variable cost. And remember what we said about the variable cost. Variable cost, we do not trust on total amount. We trust on per unit amount. So let me so if we trust the per unit amount, it means mixed cost will be fixed cost plus the variable cost per unit multiplied by number of quantity. So if you see this logic and you resemble this logic with here, so this is exactly the same equation for linear example. So variable cost per unit multiplied by the quantity. So here you have A, which is fixed cost, B, which is the variable cost per unit, X is the number of activity level, quantity, right? You can easily find out, or you can extrapolate. Sorry. You can also use different equation method to find out the variable cost using, equation reshuffling or left hand side or right hand side. You can find out the fixed cost. You can find out the total mixed cost as well, right? So example of mixed cost here, for example, if you have a fixed monthly utility charge, which is 40, your variable cost is 0.3 per kilowatt hour, and your monthly activity is 20,000 kilowatt hour. So what is your amount of utility bill? Simple. Your fixed monthly charge is 40, 0.3 is variable cost, 2000 is your activity level. You add it, you find out this is your mixed cost, $100. Right? Ali, understand? Anis?
Understood.
Good. So now question is whether this mix analysis is useful or not, because in different mathematical approach, accounting approach, economics approach, we categorize the cost as fixed or variable. We didn't categorize it as mixed cost, fixed cost, and variable cost. So it has a use. Yes, it has a use. So in accounting, each cost is classified either into variable or fixed. That's it. Either variable or fixed. But in engineering, we do have variable cost, overhead cost, of course, it can be a mixed cost as well, fixed plus variable as well, right? Because utility bills are under material overhead, right? So it has a uses, yes. In engineering approach, we do have its use, but in accounting analysis or in finance analysis, no. Or in economic analysis, we don't have the use of mixed cost, right? Okay. So we have an activity here. It's not more than 10 minutes activity. So I'm going to be again setting up the breakout room. So please take a picture and remember, whenever you are trying to solve this question, do read the cost driver, right? On the basis of this, whether this cost is variable or fixed. Because cost driver changes, your analysis changes, the behavior changes. Okay, so let me clear this picture here, clear this my ink here. So please take a picture and solve it. I think I cannot. Okay, so those who are watching here, so please, I'm going to be stopping the video here and we will resume after the breakout room activity. Okay guys, welcome back after the breakout room activity. So here we go. So you can compare your answer here. So let's just talk about the answer. So the cost of X-ray film used in radiology lab at Virginia Mason Hospital in Seattle. Number of X-rays taken, of course, variable, right? The cost of advertising, right? Advertising and base is The cost driver is number of raw concerts sold. So whether the advertising is done or not, it has nothing to do with number of raw concert tickets sold. Okay, that's why it is fixed. The cost of renting retail space for a McDonald's restaurant in Hong Kong, of course, fixed. Whether they sell one total sales at restaurant, whether they sell one burger, two burger, the rent cost remains the same. The electrical cost of running a roller coaster, number of times the roller coaster runs, of course, variable. The number of times it runs, the cost is going to be higher. Fifth, property taxes paid by your local cinema theater, of course, fixed. It has nothing to do with the number of tickets sold. Sixth, the cost of sales commission paid to salesperson at a Nordstrom store. Total sales at the store, of course, commission paid is the variable cost. Number 7, insurance paid based on number of cases of bottle produced. It has the insurance cost nothing to do with the output. That's why it is fixed. Cost of synthetic material based on number of shoes of that model produced. Of course, synthetic material is going to be increased with the increase in production. 9, the cost of shipping the cost of shipping Panasonic television to retail stores, number of televisions sold, of course, is going to be variable, right? The last one is the cost of leasing an ultra-scan diagnostic machine, number of patients scanned with the machine, right? So lease has nothing to do with the output. You have to pay fixed rent, that's it. So any confusion regarding 1 to 10? Anis?
No questions.
Ali? Subhan? Junpyo?
No, sir.
Yes, sir.
All clear?
Yes.
So that's all for our today's lecture. And until next week and next lecture, stay safe. See you next week. Okay? Take care. Bye-bye.
Thank you, sir. See you.
Bye. See you next week.
Bye.